Imagine finding out you have a massive responsibility you never, ever knew about. Well, for millions of people all over the world, that surprise comes from the U.S. Internal Revenue Service, the IRS. They're what we call accidental Americans, and they find themselves caught in this incredibly complex U.S. tax maze, often without ever having set foot in the States. And it all kicks off with a letter you would never expect to get. Yeah, it usually starts just like this. It's a totally normal day. And then you get a notice from your local bank. The one down the street, not a U.S. bank. And they're asking for a U.S. tax form, a Form W-9, and a Social Security number that you probably don't even have. And get this, they're threatening to freeze your account. Now, your first thought might be, is this a scam? It's not. This is the exact moment your life gets tangled up in the U.S. tax system. So, who exactly is this happening to? This really gets us to the heart of what an accidental American is. We're talking about someone who is, in the eyes of the law, a U.S. citizen, but often has zero real connection to the country. So how does this even happen? Well, it usually boils down to two main scenarios. First, you were born in the U.S. while your foreign parents were there just temporarily, maybe for a job or for school, and then they took you back home when you were a baby. Or second, you were born in another country, but one of your parents was a U.S. citizen. In either case, you could live your entire life somewhere else, speak a different language, and feel no connection to the U.S., but under the law, you're an American. Okay, so you might be thinking, all right, but why does the U.S. government care about the money I'm making in my own country? And that is an excellent question. It's because the U.S. tax system is built on a principle that is just incredibly rare in the rest of the world. And here is the absolute key difference. Pretty much every other country on the planet taxes people based on residency. You live and work in Germany, you pay German taxes. Simple. But the United States, it's one of only two countries in the entire world, the other being Eritrea, that taxes based on citizenship. That means if you hold a U.S. passport or are considered a U.S. citizen, the IRS says your worldwide income is fair game for U.S. taxes, no matter where you live. Now, for a long, long time, this was really tough to enforce. I mean, how could they know? A lot of people just flew completely under the radar. But then everything changed back in 2010. So how did the IRS suddenly build a net big enough to catch millions of U.S. citizens living all over the world? They did it with one single, incredibly powerful law, FATCA, the Foreign Account Tax Compliance Act. And trust me, this law didn't just change the rules. It flipped the entire game board of international banking. And here's the genius of it, or maybe the terror of it. FATCA didn't just ask foreign banks for information. It basically deputized them. It forced every bank in the world to become an informant for the IRS. They have to scan all of their customer files looking for any clue of a U.S. connection. They call it U.S. Indicia. This could be as simple as a U.S. birthplace on your ID, an old address, even a phone number. And when they find a match, they have to report you to the IRS. If they don't, the bank itself faces huge penalties. So once your bank flags you, you're suddenly thrown into the deep end of U.S. tax compliance. And let me tell you, it is a world filled with confusing forms and all sorts of hidden traps. It's not as simple as filing a tax return. It's about reporting every single foreign asset you have. And one of the biggest traps right out of the gate is what I call the two-form trap. So many people mix up these two forms, the FBAR and Form 8938. They are not the same thing. The FBAR goes to a totally different agency, the Financial Crimes Unit of the Treasury Department. It's an anti-money laundering form with a really low $10,000 threshold. Form 8938, on the other hand, is the FATCA form that goes to the IRS, and it has a much, much higher threshold if you're living abroad. Okay, this brings us to one of the easiest and most common mistakes people make. That FBAR threshold of $10,000, it's based on the aggregate value. That means the total of all your foreign accounts combined. So just like in this example, if you have 10 small accounts with only $1,500 each, no single account is over the limit. But guess what? Together, they add up to $15,000. And that means you have to file an FBAR and report every single one of those accounts. This trips up so many people. But maybe the sneakiest trap of all is something called the reverse migration trap. This is a huge risk for people who are planning to move back to the U.S., maybe to retire, and it all comes down to how the rules for that other form, Form 8938, suddenly change on you. See, as long as you're living outside the U.S., you get a pretty high reporting threshold for FATCA. For a single person, your foreign assets have to be worth more than $200,000 before you even have to think about filing that form. That high number makes a lot of people feel safe. But just watch this. The second you pack your bags and become a U.S. resident again, that $200,000 threshold, it plummets, all the way down to just $50,000. Overnight. Your money hasn't changed, but the rule book just did. So an account with, say, $150,000 that was totally fine yesterday could suddenly put you in line for a $10,000 penalty today. It's a massive trap. And that brings us to the really scary part, the consequences. And this is so important to understand. The biggest penalties are not for owing tax. In fact, most accidental Americans owe zero U.S. tax because of foreign tax credits. No, the penalties are for failing to file the information forms. They're paperwork penalties. And these penalties, they are staggering. Just for missing a Form 8938, it starts at $10,000. In non-willful, meaning an honest mistake, FBAR violation can be over $16,000. And if the IRS decides your failure was willful, well, the penalty can be over $165,000 or half the money in your account, whichever is greater. It's life-changing money. And it gets worse. Beyond just the fines, there's another huge risk. Normally, the IRS only has about 3 years to audit a tax return. But if you fail to file a required Form 8938, that clock, that statute of limitations, it never starts ticking. It stays open forever. They could come back and audit you 10, 15, 20 years from now. And this is the nuclear option. If your total assessed tax debt, and that includes all these penalties, goes above a certain limit, it's projected to be over $66,000 by 2026, the IRS can actually certify your debt to the State Department. And they can then refuse to renew your U.S. passport or even just straight up revoke the one you have. Okay, after hearing all of that, it's pretty easy to feel completely overwhelmed. I get it. But there is some really good news. The IRS actually knows that a lot of people are truly accidental and had no idea about any of this. So they created an official amnesty program to help people get back on the right side of the law. It's called the Streamlined Foreign Offshore Procedures, or SFOP for short. This program is tailor-made for U.S. taxpayers living abroad who can honestly say their failure to file was non-willful. And non-willful in IRS terms just means it was a genuine mistake. It was negligence, a misunderstanding of the law, or just plain ignorance. It was not a deliberate attempt to hide money. And the process itself is actually pretty straightforward. First, you just have to prove you really do live abroad. Second, you get caught up by filing the last 3 years of tax returns and the last 6 years of those FBARs. And finally, this is the most important part, you sign a special form, certifying under penalty of perjury that your past mistakes were not on purpose. And here is the truly incredible result. For anyone who qualifies and goes through this program, the IRS waives all of those terrifying penalties we were just talking about. All of them. You just pay whatever back taxes you might owe, which again for many people is zero, plus some interest. It is a genuine amnesty program. It's a clean slate. It's the way out of the maze. So, we've walked through it all. The shocking discovery of a hidden citizenship, the global reach of the U.S. tax system, the dangerous traps waiting for you, and, thankfully, the official path back to safety. The rules are unbelievably complex, but the solution is actually pretty clear. The whole key is to go from being an unaware accidental American to an informed one. And that leaves just one final question for anyone out there who might have even a faint U.S. connection. What's your next